Hello, everyone. Happy Sunday. Get my camera nice and straight here. Get my face actually in there. Well, folks, haven't talked to you guys in a while. We got a lot to go over. What a week we had last week. Lots of stuff happened. Looking here at the S&P 500, obviously super green week, super high volume. Look at this weekly volume on the week, up about 1.5% on the S&P 500. Not crazy. It's really the Nasdaq that is taken the market and put it on its back and has just been going completely bonkers recently. The Nasdaq with a nice about 3.5% green week. We were much higher. We have a pretty big wick here on the upside on this weekly candle, which is a little tiny bit concerning to me. But we're gonna just talk about everything that went on last week. We got our Fed hike. We got our 25 basis points, like everyone was expecting. Amazon, Apple, Google earnings were, for lack of better words, a kind of complete shit show. Amazon's earnings were terrible. They missed by a mile. Their revenue was solid. Growth in AWS slowed, which is the big one for Amazon. That's all anyone cares about when it comes to Amazon. I think that's half the reason people even are invested in Amazon, is because Amazon Web Services is such a huge thing for their business. Like the actual website, the super centers, the warehouses, none of that shit makes any money. It's Amazon Web Services that makes money for Amazon. So that's the golden goose. That's the golden egg for Amazon. And when you see growth and that's slowing down, that's a little concerning. So we saw Amazon just slide off a cliff. Filled most of the gap in the morning, but man, bears showed up on Amazon late in the day. Bears showed up in the market on Friday, late on Friday. If we look at Friday, that daily candle is so ugly. Look at that shooting star daily candle from Friday. We opened up and we just completely, things were looking good. We gapped down on Thursday. Terrible earnings from that Thursday. So we gapped down Friday morning and we just go to fill the gap instantly. The market just goes crazy. We go to run up, fill the gap, and we were jacked off 312 and bears stepped in and they sold it off pretty hard. You guys might have heard about this Chinese spy balloon flying across the United States, and I think once the media really started picking that up, I think that kind of spooked the market just a tiny little bit. Chinese stocks had a rough day as well. Looking at NEO and Li Auto, they had a rough day. So that Chinese spy balloon could be a little bit to blame. I'm not sure. If we look at the VIX over Friday, it actually went down on Friday, which is kind of crazy to me that the VIX is this low and we get a red day, like a pretty big red day in the market for Friday, and VIX just didn't do anything. The Nasdaq was down like 2%. The S&P was down about 1%. And VIX just didn't care. It just didn't even move. So right now, we're at this point in the market. This next week we're going into, there's really not a whole lot worth talking about. We have these earnings, some big ones that jump out. Enphase is pretty nice. Disney, that's a big one. PayPal, Cloudflare on Thursday. So Thursday has some solid ones, but really nothing crazy, nothing jumping off the picture to me. Not nearly as huge as last week's earnings. And then in terms of data that we have coming out on this upcoming week, there's really not much. We got consumer credit, we got mortgage applications, crude oil, some more unemployment information coming out. And then actually February 10th, that's a big one. Consumer sentiment, that's going to be a big one. So not a lot of earnings, not a lot of big catalysts news-wise coming out. So another big reason for this kind of pullback that we had on Friday, I think, is that that unemployment data that we had come out on Friday morning was insane. Let's see. It was so hot to the upside. It was unreal. Surprise surge unemployment rate at 53-year lows since 1969. So unemployment rate at 3.4 versus 3.5% in December. That's crazy. Non-farm payrolls increase 500,000 in January, and I think they were expecting about half of that. So they were expecting 260,000 jobs, I believe. Economists at Reuters expected a gain of 185,000, but we got 500,000. So why do you think the market might not like that? Well, because that is the part of the pie that, unfortunately, the Fed, they spent a lot of time talking about that. Unemployment when it's this low, labor market this tight, so many more jobs than people looking for jobs right now. This is an inflationary thing, and we want to see unemployment going up. We don't want to see unemployment going up to like 8%, but we want it to go up to maybe 4%. The Fed was expecting unemployment to jump up a full percentage over the span of this year. And the first employment data that we get out of the year is insane. We have unemployment going down still from 3.5 to 3.4. And why is that crazy? Because 3.5 is already very low. And it's crazy because of how aggressive the Fed has been tightening, and the job market just doesn't even care. It just doesn't even care. I mean, it's great for average Americans. Everyone loves low unemployment, but it's not great in terms of the Fed trying to get inflation under control. And yeah, really just like, it's crazy. It's insane how tight the Fed has been jacking up rates, and how tight the labor market just has persisted. It's actually kind of insane. And that is something that we have to pay very close attention to. And now that we have very few catalysts coming up this next week, you can see what the market's been doing. We've just been going straight up. I mean, we go from 377 straight to 420 damn near on the S&P. Now is the time I would like to see. Of course, I want to see more upside. I'm pretty long at the moment. I'm not fully. I'm still long term, looking 6 to 12 months out. I do not believe we've bottomed, but I'm not fighting the market right now. I'm pretty long right now. And I'm looking at buying the dip because now we've broken local highs. We've just had such strength to the upside. Unless we see some really bad news come out, some really bad CPI inflation news, some PPI, PCE, any of the inflation news, if we see any kind of uptick in that, that is really the only thing I could see yanking down the market in a big way. And I mean like an upset, like CPI comes out much hotter than expected, like inflation's much higher than expected. Obviously that would be bad because now the entire market is just built up on this house of cards that inflation is going down and we have killed it. And I find that very unlikely. I highly doubt that's going to be the case long term. I think what we're going to see is we are going to see CPI. Let's get CPI year over year. I think what's going to happen is we are going to see our CPI rate. It's coming down nicely because of how high oil was over the past year and last half of the year. So I'm expecting we see CPI. Yep, it's coming down. We're going to see CPI do a little bit of this, do a little sideways stuff because it is an unsustainable pace at how quickly CPI is going down. It's completely unsustainable because it is completely being pushed by how far gas prices have dropped. Gas prices were just so high and they dropped so quickly that got CPI numbers month over month to look like insane, like they were like inflation. We were getting deflation. A lot of that was just the oil prices and how quickly those were going down, and those will not continue to go down at that rate. If anything, they could spike, God forbid. Right now, oil does not look like it is about to. Oil is just in a really solid downtrend right now, and you can see that we're about to make a new low on oil. At least that's what it looks like. This looks like it was kind of a bear flag and oil's breaking down, but you got to really watch out for that. So oil going down, very good for inflation, but it's not going to keep going down. We have to ask, well, if oil starts to go sideways, then what is going to be pulling inflation down? Well, it has to be those lagging things like the service side inflation. And now we know that that's probably just not going to go anywhere anytime soon because of how tight the labor market still is. Those things don't just come down when the labor market is this tight. They stay high. Service side inflation, like 0.5% month over month, is still very high. That's all the Fed was talking about. So it's kind of like we're on a pendulum. And when you're trying to pull one side down, when you're trying to pull the entire inflation thing down, oil can only pull down one side so hard, and then you still have that heavy weight, which is actually more than half of the percentage, or more than half of the total weighting in terms of inflation is the service side inflation. When you still have that heavy weight on one side, oil can only pull down their side so much, and then that service side starts to bend it back up, and we could possibly see just CPI sticky here at like 3.5 to 4%. Right now we are heading towards 4, but if we do see that service side inflation just not budge, it's going to get sticky. So right now the market is just red hot on the hopes that, yep, we've peaked on inflation. It's going straight down, but it's a very delicate thesis right now because just one bad CPI report can fuck everything up. And I mean it. It can screw everything up. we're to the point where earnings just don't even matter, because Apple had horrendous earnings. Apple, first time they missed on earnings since 2018, I think. No, 16. Very bad earnings for Apple. Very bad earnings for Google. They all of them. No, get off my screen. All of them. Yep, they missed on revenue. A lot of this, now they would have hit on revenue if it wasn't for the strength of the dollar. The strength of the dollar was still really high for this last quarter. You can see it over here, December. I mean, it weakened, but we still had October where the dollar was still very high. So obviously a lot of the revenue comes from China, coming from Europe. Now that the dollar has started to come down, we will see that those earnings start to regulate, and I think the market knows that. So I think that's why these earnings weren't such a freak out for things like Apple, which Apple, by the way, on Friday just went absolutely crazy. My Apple calls, I sold them at 100%. I took profit up here, which I was like, thank God, because we did end up coming down. Didn't get greedy. But Apple was just a beast, like unbelievable. I've never seen anything like it. I mean, just crazy. We gap down on Apple, and it just fills the gap in one candle, and we go from 148 straight up to 157. And I was just like, I'm taking my profits. You are a greedy dumbo if you are holding calls overnight into earnings, and it makes a move like that, and you don't take profits. You have to. You cannot be greedy. So now that I've talked about all these things, I really want to see the market do a little bit of consolidation now. We have seen the market do this before in the past. We've seen Apple just go straight up and just never really take a pause. We do a little consolidation, but just straight up, straight up, straight up. The market has just been going straight up. Tech has just been going straight up recently. This is obviously unsustainable. If you look at the month over month, I mean, the Nasdaq was up 10% over the month of January. Obviously, that's not sustainable. We're not going to have a 120% gain on the Nasdaq over the year of 2023. That's just not going to happen. Same with the S&P 500. S&P 500 was up 6.5%. What are we gonna have what's the math on there? Like a 72% year on the S&P 500? Not going to happen. So we need to see not just like rug pulling. If we do start to see rug pulling, I'm really worried. But I'm kind of expecting the S&P 500 and the Nasdaq to try to do some consolidation in this zone. Now you can see right where we are that we are in a big old supply zone. If I can get my little rectangle friend out, this right here, I've been talking about this forever. Monstrous supply zone, and you could tell we got in there and we rejected. So we have a huge supply zone up here, 418 past about 420. That the market, in order to get over that, I think we will need to see some consolidation. And now I could expect we see consolidation from way up here, 418, all the way down to like 403, maybe even down to 400. If we get back below 400, I'm a tiny bit worried. But it all depends on if we get like 1% down days in a row, I'm not worried. But if we open up tomorrow and we get like a 4% red day in one day, and we see VIX just spike, then I'm a little worried. The fact that VIX actually went down on Friday kind of convinces me that it was just a buy the dip, like controlled sell-off, just taking profits. So if we see VIX, you can see this big yellow line. This is the downtrend the VIX has been in. We break above that, and we mount above 21 on the VIX, and I'm a little bit more worried to the downside. But if we just see VIX just bouncing around 19, 18, that range, and we eventually come and rest down. I mean, the next level on VIX is way down here at like $16. I mean, 16 on the VIX, 16 to 15. This is the next range that the VIX is headed towards. So we need to see a spike in the VIX in order for me to get bearish. We need to see the Nasdaq completely just not even hold any of these levels. I mean, we know 290 is huge on the Nasdaq. I would love to see if it could just hold 300, but I'm kind of convinced we'll see some downside. But I just want to see some consolidation. We can see consolidation in the Nasdaq because the Nasdaq, same exact thing. We have this monster supply zone, just huge supply zone up here. All sellers. Look at that. That was when the Nasdaq sold off at 69 million shares. Nasdaq dropped 4% on that day. That's going to be a tough level to retake. And I want to see consolidation before we do that, because consolidation is very healthy. You cannot just go, the market's done this before. We've had these we just go straight up. This isn't healthy. Because why is it not healthy? Because then when things go bad, it just goes straight back down. And if you get consolidation, then the upside, it's a much more healthy way for the market to go up, because this is just unsustainable. It's not gonna just keep going up like this. I know I hate to be that guy. Unfortunately, the Nasdaq will not go up 120% this year. I hate to say it. I know it's tough news. I'm sorry, bearer of bad news over here, but right now things are still looking pretty bullish. And now back to the Fed. So Mr. Powell came out and he said really good things. Everyone loved what he said. Obviously, market just went crazy the day after. Now the market is going to have to see what happens to inflation once they stop taking rates up. So they're aiming for 5% on the interest rate, basically. That's kind of where they've told us, yep, that's where we're going to stop. And that's where we'll pause. And I think the pause will be short-term, really bullish. But then it's going to just be a waiting game of, does that service-side inflation continue to come down even when the Fed stops jacking the rates up? Because we know these rates are very lagging. It's a lagging thing in the economy. These rates take a long time to actually kick into effect in the real economy. So we need to see how inflation reacts when they stop jacking these rates up. If we sit at 5% for about a year and a half, like they are kind of telling us they want to happen, and we see inflation just stagnate at that 3 to 3.5 to 4% range year over year, then I would be very worried. This is obviously a long ways out, but the market is going to want to see how inflation reacts to the terminal rate topping out. I mean, they want to top it out at 5%. If we top out at 5% and inflation doesn't just continue to come down like it is right now, and it stops and it, God forbid, ticks back up, then I think we should be very worried. Then I think that is Black Swan-esque event. If we sit at 5%, so say they jack it up to, I think it's at 4.5 right now. So they get another 25 basis points. So we'll be at 4.75 to 5% after March, next FOMC meeting. So say they do that in March, we get an entire summer. Inflation's looking good. They haven't touched rates. They haven't talked about cutting rates yet, but everything's looking good. Inflation's coming down. CPI comes down to about 3%, and it just stays there, or 3.5, or PPI. Let's look at PCE. Do they even have PCE year over year? I don't think they do. But say, yeah, let's just use CPI. It's good enough. Say we just bottom out right here like we did back in August of 21. We bottom out at 3% year over year. This is core too, I believe. Yes, this is core, not headline. So say we do that, and say unemployment still isn't moving. The Fed is not just going to sit and watch CPI go sideways at 3%. They have said they want 2% on PCE and CPI and PPI. They need everything at 2%. And 2% to 1.5 to 2.5% is their target. But if we just stagnate at 3 to 3.5% and they have jacked rates all the way up, and we have gotten a full year of those rates, and we know now that those rates have really tapped in and affected the market, if we don't see CPI continue to go down at that point, and the Fed has to come out and be like, all right, guys, time to start taking rates even higher than we previously thought, I think that is a Black Swan-esque event, and that will be horrendous, because right now the market is only going up because they believe inflation has been conquered and that they are sooner than later looking to eventually start cutting rates. And eventually get that soft landing. That's basically why the market's so crazy right now, because they're like, damn, we did it. Powell did the soft landing. We got it. But if we stop, stagnate, and they have to come out and be like, hey, guys, inflation ain't moving. We did everything we could. We got the 5%. We're going to have to go to 6 to 6.5%. I think that'll be very bad for the market. I don't think this will happen. I'm just trying to give some scenarios here. I could see that happening. I could see it happening, like if they had to do it, that the market would just completely shit its pants. So, all these things said, we are day traders at the end of the day. We cannot marry our biases. I know things look fantastic now. We just had a 10% month on the Nasdaq. Things couldn't look better right now. But you cannot get married to your thesis, because anything can happen. We can just, if we get a red hot CPI report this next month, or month after that, 3 months down the line, it can instantly flip things, just instantly flip things. So you cannot just be completely married to this bias that we are absolutely done. We're in a new bull market. You just have to trade what's in front of you. You have to, the trend is your friend. You can't You can't just be like, well, we broke recent highs. Everything looks good. So I'm just going to buy everything. I'm all in. I'm on margin. I'm going to buy a bunch of risky shit like NVIDIA and SoFi and all that. You can't do that if things change. So you have to have your head on a swivel and be ready to change with the market. We react to the market. We do not predict what it's going to do from here. Right now, things look bullish. I'm not bearish short term. I'm bearish 6 to 12 months because I think once CPI stops dumping at the rate it is, then the market won't be as happy because that's really what's gotten the market so happy is that CPI just keeps going down and the Fed keeps sounding a little bit dovish. So we're going to go up. And actually, the market's expecting really shitty earnings. So we got those shitty earnings and we're still going to go up. And yeah, that's the way it is. I don't think that's just going to last forever. And you just have to watch out for that. So real levels on the Nasdaq. No, NDX. Real levels we're looking at on the Nasdaq. If we come down below 1200 on the Nasdaq, that has me a little bearish. 1220 is, yeah, let's say 1220. If we come down below that, I would love to see this SR flip, the support and resistance flip here, where we come down and retest 1216 on the Nasdaq, and we retest these previous local highs, and that becomes our support. I would love to see that. So if you look now, that would be a big move to the downside. That would be like another big red day tomorrow. If we do get another big red day tomorrow, that doesn't change any of my mind. That would be like another 3%. So we come down. I would love to see that level tested and find big support at that level. That would really, really push me to be more bullish, especially in the longer term. But I would love to see that on the Nasdaq. So if we can't hold that level, I'm looking a little bit more bearish. If we can't hold 1190, that really makes me more bearish on the Nasdaq. If we look at the S&P 500, same idea. I would love a retest of 410, and if we can bounce off that, that's fantastic. But I'm really getting bearish below 400. I think big psych level, that is ultimately where you've seen the market kind of every time we get that 400, we come back down and we give it back. That's really where the market has struggled. And then like over here, yep, we couldn't hold 400. Over here, we're up at 400 for about 3 days, couldn't hold it. Over here, about 2 days, couldn't hold 400. Over here, we're at 400, CPI back in June. Boom, we're above 400. Look at this. We break 400, we consolidate in this zone forever. We just consolidate, and then what happens? The second we lose 400, we rug pull. Market just dumps. S&P down 8% in a week. So that's an obvious huge psych level. I would love to see the S&P hold that. So that's a lot of room to the downside, and that's what you have to do. You cannot, if you're bullish short term, you cannot just see like a 1% red day and be like, all right, we're done. Everything's going back down. It's all a bunch of BS. You have to wait and see these massive levels that the market will retest. It's definitely going to try to retest. I believe so. Or we could just be exactly like we were back here. You see this range? You see that? We're back in that low range right there, back from June CPI where the market tried to go up, but hey, we couldn't. Just worth thinking about. But yeah, guys, we had a great week. I mean, I made 100% on that S&P, that May call, made about 500 on that. Not bad. Otherwise, stocks I have right now, I'm holding Square. Square, look at that. We come up to that supply zone. We reject it. No big deal. I would love to see support at Square at the $80 massive psych level, obviously. If below that, I'd love to see support at 76. Below 76 on Square, I get a lot more bearish on the stock. But right now, it is just, I mean, just like everything else. I think these risk-on stocks are going to make the real moves to the upside once we are actually comfortably much more bullish in the market. Looking at Datadog. So Datadog had a big red day. You could see, I mean, all these stocks are just, you just go down the line and it's just like, boom, right there, local high, boom, right here, local high, boom, right there, right here. There's just all these levels that the market, that these stocks are going to have to take over. And the bears are going to show up at these levels. So I'm not surprised, but this was a terrible day for Datadog. I mean, we dropped almost 9%. So would love to see support on Datadog at the $73 level right here. I would love that if we could retest that and bounce off of that. What else am I in? Oh, SoFi. So I bought some really, really long outdated calls on SoFi for for January of next year. They're $5 in the money. I could hold these puppies for a very long time. I love SoFi. SoFi is on the brink of being a profitable company, and that is really where stocks can take off. When you can find any company. I mean, it's not hard to find any small company that was unprofitable for a very long time, and then you slowly see those earnings get to profitable. Look at that. We're negative 12 cents a share, negative 9 cents a share. Now we're negative nickel a share. So you can see the rate that this is going at. And now SoFi, they are still affected by this loan whatever the hell it is, like the student loan pause. They're not getting payments for that. So once those kick back in, that's going to be huge for SoFi. I think that pushes them over that profitable edge, and then we see a big move on SoFi. SoFi is heavily shorted. Once that starts to squeeze, we'll see a big move on SoFi. I see that happening within the rest of this year. So I like SoFi, but right now, obviously it's overbought. Obviously, we'll see a pullback on SoFi. If we can pull back and find resistance at $6 or $6.50, that or support at those levels, that would be fantastic. But I think that's all I have. Oh, and Bitcoin. So yeah, let's talk about Bitcoin. Bitcoin is obviously, we're down right now on Bitcoin. No surprise there. Sundays are really weird for Bitcoin. They can always be big moves to the upside or just kind of moves to the downside. But right now it looks like Bitcoin, we're just kind of doing a little consolidation, almost like an upward channel right here on Bitcoin. Thought someone knocked on my door. So I like Bitcoin. I mean, these risk on things are just they're gonna go crazy if we really push onto the bullish territory. If we really are bullish, if things are really bullish, we'll start to see these things moving. Now Bitcoin, if we dip back below 20,000 on Bitcoin, then I think it's going next leg lower. 20,000 is going to be huge on Bitcoin, because it's just been the level where when it gets below that, it comes back up, and then it loses 20K. That's when it dumps. So same thing over here. I could see the same exact thing happening over here. If we come down, test 20, and we can't hold that, then I could see a big dump. But right now, Bitcoin looks pretty good. It's about to have its own little golden cross, actually. How about that? How's about that? But everyone talks about the 50-week moving average on Bitcoin. It's been a historical indicator of when dips on Bitcoin are like over, kind of. And we're about to touch it. We're about to retest that puppy. We haven't been above that since March. So, yeah, Bitcoin looks fine. It looks good to the upside. I don't know what to say. Anyways, I would ask you guys, please, to drop a like and a comment and a sub on the channel, or at least consider it. I would really appreciate that. And just drop a comment if you have any questions, if you want me to talk about anything in specific. But yeah, thank you for watching, guys. Let's see what this next week brings us. Tomorrow, I'm kind of expecting some red. I'm really expecting red. I would not be surprised if this next week is just a rough red week. We dip like 3%, 2%. But is it by the dip or is it by shorts? Only time will tell. Anyways, guys, I'll see you later. I'll drop a video tomorrow and probably the next few days. Let's see if we can get a video out every week. God damn it. I'm always slacking on Thursdays and Fridays. But hit the bell. Don't want to miss these, boys. I'll see ya.